Well, the big news in September, we were watching it, waiting for it. The Fed's rate cut, a big one, right? First rate cut in 4 years. I know the phone was probably blowing up across country. Hey, what are the mortgage rates now? What are they down to? How low are they going? Well, you might be surprised to find out that they haven't moved very much. In fact, even crept up. We'll explain why that is and what to expect with mortgage rates in the future. Hello, welcome in. This is the Smart Mortgage Show. Ben George with Bill Litton at Cross Country Mortgage. Bill, I would love to hear your reaction to, or at least get an update on what you were hearing from people and friends and family and potential clients about the latest Fed cut. We've been talking about it coming, and then you had a pretty big one. I'm sure you probably got some feedback. Okay, what are mortgage rates now, right? Everybody excited about potentially lower rates.
So when the Fed announced a 50 basis point or 0.5% cut in the federal funds rate, okay, which is the first cut in 4 years, the sentiment of the consumer was, oh my God, interest rates must have come down 1%, because consumers tend to think that 30-year and 20-year and 15-year fixed rate mortgages are directly tied to the federal funds rate. Now, there is absolutely a correlation, but they are not directly tied to that. So actually, Ben, when the rate came down 0.5%, the federal funds rate, that is, 30-year fixed rate mortgages actually crept up a little bit.
That's, I think, what the surprise is, right? And I know we've talked about some of that stuff already probably priced in as we, the last few months we've been doing the mortgage updates here on the YouTube channel. So make sure you subscribe. We'll be doing them every month, kind of keeping an eye on what's happening, give you some the latest trends and whatnot. But I think it's interesting because we already kind of talked about them kind of being priced in. And I think even though the cut was, I think maybe it was because the cut was a little bit bigger than a lot of people expected, that I think people just immediately assumed, well, we're going to see that reflected across the board, and maybe now is a chance to lock in that great mortgage rate, but just wasn't the case, was it?
Well, great point, because we had been saying that we believe that this federal funds rate cut was already baked into the current rates. Now, 3 months ago, rates were closer to 7%. Now they're closer to 6%. So technically, the correlation from 0.5% cut in the federal funds rate actually brought 30-year fixed rate mortgages down almost a full percent, but it was already baked in because the market had already forecasted it. And actually the market and maybe the smart money had already forecasted and baked in 0.5%, right? Because we were expecting a quarter, we got a half. When we got the half, we didn't get much movement. In fact, the rates crept up just a little bit, which is probably due to other factors that we're going to talk about in a minute. But that change was already baked in. So I had some customers say, man, it's just my luck. I didn't get another 0.5%, or I didn't get the 0.5% reduction. And we corrected them on that and said, well, no, you actually, instead of getting a 7% rate, you actually got a 6% rate. So you already got the benefit of it. It's just in their minds, it didn't correlate exactly with the timing of the Fed cutting those rates on that day, but they got the benefit.
Yeah, I think it's so important to zoom out just with financial planning. And of course, when we zoom out on mortgage rates, we're still in a great mortgage rate environment, right? Big picture, but even a little bit more narrow focus is that, the last 3-4 months, we've seen that creeping down. And even though it wasn't reflected the day that the Fed made that cut, you don't see a big drop in mortgage rates. Well, it's already been happening over the course of the last few months. So still some good news there. But moving forward, I know there's probably still questions of, okay, we're starting to see the Fed kind of ease that up a little bit. Do you think this will continue to play on a trend with mortgage rates as well? Well, it might not be immediate, it might not happen overnight, but we'll still continue to start to see it slowly ticking back down, even closer to 5 maybe at some point down the road.
The economic indicators that are really most important when it comes to 30-year fixed rate mortgages, the Fed lowering the rate, rates coming down in general, number one is inflation. Okay. So, last week we've got a reading for GDP growth for Q2 at 3% which was a little more robust than they had hoped. So that still indicated that the economy is running a little bit hot, right? So that caused a little bit of gyration and maybe what caused the slight increase that we saw after the Fed lowered the rate. And now think about it. If you see anything that's a little more robust or hotter than you want, and the Fed lowered the rates, which would heat up the market, well, the bonds got a little jittery. Now, they didn't get jittery like going back to 7%. They got jittery like going up 0.1%. And now, generally we were in the 7% range, and I feel like we're firmly in the 6% range right now. So that's the good news. PCE reading came in today, okay? And PCE is personal consumption expenditures. It's just what Americans are paying for goods. Okay, it came in 0.1% higher, which means we're still, inflation's always happening and at a controlled pace is healthy. They thought it was going to be 0.2%. It came in at 0.1%. So it came in lower than expected, which bonds like that. So today bonds are doing, a little bit better and heading back in that direction that we want them to. To your point though, Ben, overall, the Federal Reserve feels like we're going to have another 0.25% to 0.5% in cuts this year, 0.5% to 1% next year, which means we're creating a new channel down. So we were in an increasing rate environment. Now we're in another economic cycle, which means that barring any extenuating circumstance that's unforeseen, we're in a channel down. Your question, are rates going to continue to come down? They should. That is absolutely the forecast. We should see 5.5. We should see 5% I would say in 2025.
Welcome news for sure. And I know I just saw headlines today that I think mortgage rates at an all-time low for the last 2 years, a 2-year low, I guess I should say. And so there's still good news. I know that the initial reaction was, oh man, we don't see this in the mortgage rates like we saw the Fed's cut. So I know it seems like there's not a lot of movement, but in the background and when you zoom out, there is and has been for a little bit of time. And hopefully moving forward, that being the case as well. But anybody, Bill, that's kind of in the market right now looking for a mortgage, wants to see their options, really the best thing to do is come in, have that free consultation, that 15-minute loan consultation, see what your options are and kind of see what your full financial picture is, right?
Exactly. I think that having a conversation, us understanding what your goals are, us learning more about your scenario. And one of the things that we're talking to folks about is, the possibility. So don't overextend yourself so that you have to have rates come down. But we feel like there's a good chance, right? All of the economic indicators point towards it. So let's talk about your rate today when you close. What's your rate going to look like when you refinance? Because there's a strong possibility you'll have that opportunity, and that's going to lower your payment. Everything we cover in our meeting with you.
Best way to get in touch with Bill, everything will be in our show notes description, so make sure you check out that. But 484-352-4151. Also log on smartmortgageshow.com. There's some resources there, but all of our podcasts, all of our shows that we've done over the last couple of years are all there. So if there's something on your mind, something that you're curious about as you're going out and beginning your home buying process, check that out. We'll probably have a lot of the answers to your questions there, but always encourage you to reach out to Cross Country to go into a deeper dive into your situation and what options you might have. So good news, I think overall, Bill, the reaction might have been a little lukewarm from people that aren't paying close attention to the big picture, but still good news overall, right?
Absolutely. Good news overall. We're heading into a different market, and it's going to help home buyers and home sellers for that matter. It's going to help the entire housing market, which is great. We needed it. It's been a couple rough years, and we're headed back in the right direction.
Love to see it. Well, thank you for watching. Again, please subscribe to the show. Leave a comment if you have a question for Bill. We may feature that on a future show. Bill, thanks for your time.
Thank you.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.